Are we heading for a housing crash, or is the Hampton Roads housing market quietly setting up to be one of the best opportunities we've seen in years? If you've been watching the national news lately, you've probably heard a lot of noise. You've heard about price reductions, you've heard about rising inventory, you've heard people talking about market corrections. Some people are even throwing the word crash around again. And if you're thinking about buying or selling a home this year, I completely understand why you're confused. Every week, I have buyers asking me if they should wait. I have sellers asking me if they missed their chance. And I have homeowners wondering whether the market is about to shift dramatically. But here's the problem. The national headlines don't tell the story of our market. They don't tell the story of Hampton Roads. And after reviewing the May numbers for the entire region, I think there are three major stories emerging that every buyer and seller needs to understand right now. Because what I'm seeing isn't a housing crash. It's something much more interesting. Stay tuned and I'll break it all down for you. Hi, my name is Kerry Tanner. I'm a local realtor in the Hampton Roads area, and I help buyers, sellers, military families, and relocation clients all across Hampton Roads navigate this market every day. Today, I'm going to break down what happened in May, what it all means for the rest of 2026, where the opportunities are emerging, and what I believe buyers and sellers should be doing right now. So let's get into it. But before we talk about Hampton Roads, let's quickly address what's happening nationally, because that truly matters. Nationally, some housing markets are showing inventory has increased in many parts of the country. Some markets are seeing modest price declines. And Zillow recently adjusted its forecast slightly downward for the national market. Now, if you stop there, it sounds concerning, but context matters. The overwhelming majority of economists and industry experts are not predicting a housing crash. The reason is simple. The conditions that caused 2008 market crash don't exist today. We don't have massive oversupply. We don't have widespread risky lending. Homeowners today have significant equity. Lending standards remain strong. And nationally, we're still well below the inventory levels that existed before the last housing collapse. What we're seeing is a market that is normalizing, and that's a very different thing than a market that is crashing. Now, let's talk about Hampton Roads. The first big story from May is that prices are still moving higher. For the entire Hampton Roads region, the median sales price reached approximately $390,000. That's up about 4.8% year over year. Think about that for a second. Despite higher interest rates, despite the national headlines, despite buyers becoming more cautious, prices are still appreciating. That tells me demand remains healthy. Now, are homes selling overnight the way they were a few years ago? Not necessarily, but they still are moving. The median days on market for the region is just 17 days. That's not a market sitting still. And it's not a market that's in distress. That's a market where well-priced homes continue to attract buyers relatively quickly. Sellers are still receiving nearly 100% of their asking price on average, and that's another important signal. If buyers suddenly had all the power, we wouldn't be seeing that. So the first major takeaway from May is this: the Hampton Roads market remains remarkably resistant, not overheated, not collapsing, but resilient. The second major story is that buyers are finally getting something they haven't had much of over the past years: options. Inventory has increased. Active listings across the region climbed to roughly 4,600 homes. We're also seeing more new listings come to the market. Now, before sellers panic, I actually think this is healthy. A healthy market needs inventory. A healthy market needs buyers to have choices. A healthy market needs transactions to happen because people want to move, not because they're being forced into bidding wars. And this is where I think many people are misunderstanding the current market. Some buyers see inventory increasing and assume prices are about to fall off a cliff. I don't see evidence of that in this market. What I see is balance slowly beginning to return, and balance is good for everybody. The third major story from May is that not all cities are behaving the same way. This is where local knowledge becomes incredibly important because Hampton Roads isn't one market. It's several different markets moving at different speeds. Hey, real quick. If you're enjoying this video and want a more complete breakdown of the home buying process, I recently hosted a live online buyer seminar and the full replay is available for free. I cover financing, VA loans, first-time buyer programs, inspections, closing costs, and what buyers should expect step by step throughout the process. If you want to feel more prepared and less overwhelmed before buying, I think you'll get a lot out of it. The replay link is in the description below. Now, let's get started with Virginia Beach. Virginia Beach remains one of the strongest markets in the region. The median sales price reached approximately $425,000. Homes are selling in around 2 weeks, and even though inventory increased, demand remains extremely strong. What that tells me is that Virginia Beach continues to benefit from something that isn't changing anytime soon. People want to live there. Whether it's proximity to the ocean, lifestyle, employment, or simply a limited availability compared to demand, Virginia Beach continues to show strength. If you're a seller in Virginia Beach, you're still in a very strong position. If you're a buyer, preparation matters because good homes are still moving very quickly. Now, let's talk about Chesapeake. Personally, I think Chesapeake may be one of the most competitive markets in Hampton Roads right now. The median price climbed roughly to $430,000. New listings declined, inventory remains tight, and sellers are receiving more than their asking price on average. Think about what that means. In a market where people keep hearing about slowdowns, Chesapeake buyers are still competing aggressively for quality homes. That tells me demand continues to outpace supply in many parts of that city. If you're shopping in Chesapeake, you need a strategy because waiting for dramatic price drops may not be realistic. Now, Norfolk is telling a different story. Norfolk continues to look like one of the most balanced markets in the region. Prices are up, inventory has increased, and homes are selling relatively quickly. But buyers have a little more breathing room than they do in Chesapeake or in Virginia Beach. For buyers, that's encouraging, and for sellers, it's still a healthy environment, but pricing correctly matters more now than ever. Then we get to what I think is one of the most interesting stories in the entire report, Suffolk. If I had to identify one area where buyers currently have the most leverage, Suffolk would be near the top of my list. Inventory levels are higher. Homes are taking longer to sell, months of supply is higher than anywhere else in the region, and prices softened slightly compared to last year. Now, I want to be careful here. I'm not saying Suffolk is weak. I'm saying Suffolk is creating opportunities. There's a difference here. If you've been frustrated by competition in Virginia Beach or Chesapeake, Suffolk may offer something you haven't seen in a while: negotiating power, more choices, and in many cases, more house for the money. For buyers, that's worth paying attention to. And for sellers, it simply means strategy matters. Overpricing is much riskier than it was a few years ago. Another city that caught my attention this month was Portsmouth. Portsmouth saw one of the strongest price increases in the region. At the same time, inventory remains extremely tight. That's a combination that tends to support continued seller strength. Buyer demand remains high relative to available homes, and that's helping support price growth. Now, let's head on over to the peninsula side. Hampton and Newport news continue to show steady momentum. Both markets are benefiting from affordability relative to some Southside locations, while still still attracting strong buyer demand. And then there's York County. York County had one of the strongest months in the entire report. Prices remain among the highest in the region. Closed sales surge dramatically and inventory remains tight. That's a market sending a very clear signal that demand remains strong. So what does all this mean if you're a buyer? The biggest question I hear right now is whether you should wait for rates to come down. And the honest answer is that nobody knows exactly where rates will go. Could they move lower later this year? Possibly, but here's what I think many buyers are overlooking. If rates drop significantly, competition will most definitely increase. Buyers sitting on the sideline today will suddenly jump back into the market, and that means more competition, fewer opportunities, and potentially higher prices. In other words, waiting for a lower rate doesn't automatically mean getting a better deal. Sometimes it means paying more for the same house. What I think buyers should focus on is affordability. The questions you should be asking is, can you comfortably afford the payment today? Can you find the right home for your family's needs? Can you negotiate favorable terms while inventory is improving? Those are the questions that truly matter. And if you're using a VA loan, that conversation becomes even more important because you have access to one of the most powerful financing tools available in real estate. Now, if you're a seller, here's my advice. The market is still very good, but it's no longer forgiving. The days of throwing any number on a property and expecting buyers to chase it are largely gone. Today's successful sellers are doing three important things. They're pricing correctly, they're presenting the home well, and they're marketing aggressively. The homes that check those boxes are still moving quickly. The homes that don't are sitting longer than they need to. Finally, let's talk about what happens next. Based on everything that I'm seeing, I don't believe Hampton Roads is heading towards a housing crash. I believe we're heading towards a healthier market. Inventory is improving, buyers have more options, sellers still have equity, demand remains strong, and our local economy continues to benefit from factors that make Hampton Roads fundamentally different from any other market across the country. Could we see some markets slow down than others? Absolutely. Could some neighborhoods outperform others? Without a question. But the overall story remains remarkably positive. The bottom line is this: the Hampton Roads market is not following the national narrative. It's writing its own story. And for buyers and sellers who understand what's happening locally, there are some real opportunities right now. If you're thinking about buying or selling, relocating, or simply just trying to figure out what all of this means for your specific situation, I'd be happy to help. You can call, text, email, or schedule a time directly on my calendar by using the information below. And if you found this information helpful, make sure you subscribe because I put out videos every week that break down what's happening in the Hampton Roads market and the best tips for buying or selling a home. Thanks for watching, and I'll see you on the next one.